Right, hi guys. So welcome to this module that is actually going to cover the best way to check your position. Okay, so just before we enter a position, how do we go about determining what's the best place to get in? Right, so a lot of you guys may have seen a lot of maybe courses on Wyckoff, but no one tells you when to buy, right? So I've gone through the trouble of actually selecting one of my own stocks from my portfolio, and that's going to be my buy this year. Okay, so I'm not gonna mince this, right? This is my stock and I love this guy, and I've been watching AngloGold Ashanti for like a long time. And for those of you guys who are not familiar with miners, I've been crunching their accounts. I've been looking at them. That's a completely different part of stock investing, okay? And I probably have to do a whole separate course for this. But just remember, guys, you don't have to even go through all that trouble. I have certain criteria that I want my stocks to meet in my portfolio that takes me to their accounts. And I want to know about any acquisitions because that could mean money. And just to give you guys an example, I bought a company, I think it was, last year? I lose track of time. It was either last year or 2016. Anyway, I bought a company in China called Trina Solar. And Trina Solar was pretty much in its accumulation phase. And something really interesting happened because Trina Solar got bought out by itself, basically. They bought back their shares and they offered a premium. So I was invested in Trina Solar at the price of just, I think, roughly about $2 a share. Trina Solar offered me, I think, about $4.50 a share. Yeah, roughly around that anyway, on an acquisition. Right, so I got paid out for my entire share stock that my entire share stash that I had with Trina Solar. So I do stuff like that, okay? And the reason being is that I knew that Trina Solar was probably going to make a play because I read their 10K report, and I realized that from their 10K report that they were going to make a play on the company, right? Because they were saying that there is the possibility we might want to buy back our shares because the direction of the company is really good and we probably don't want to be public anymore. Amazing, right? But anyway, I read that in the 10K report and I thought, great company to hold, and the 10K reports can reveal a great deal, right? So that's why I do it. But technically, the information was already there, but sometimes you have to be honest about skill set. And I thought that maybe I cannot deduce that kind of information by investor volume behavior on the stock, right? But I can see it in the 10K report and I can link that to any investor behavior. So Ashanti Gold is one, Anglo Ashanti is one of those. They got some mines in Mali, and Mali is a very stable country because the government knows what to do when foreign companies come in to mine their gold, right? They get like a 10% stake in those companies, right? So and they're pulling up a lot, right? It's a great company. And yeah, they're on my radar. Anyway, I'm not going to talk too much about Ashanti Gold, AngloGold Ashanti, because I'm not here to tout a stock. Right? I'm here to teach you guys about Wyckoff. Right? So we're gonna move away from that subject, okay? And guys, you know, trading is risky. Don't invest in this if you don't believe in yourself, okay? Don't do it because I'm saying that AngloGold is a great company. I think it's a great company, and I'm going to do some analysis here, which will be very convincing, right? But don't go out and buy it because I said so, right? So just as a little disclaimer here, stock market trading is risky. You could lose all your money, your house, your kids, your wife, everything. Don't do it, right? That was a joke, right? But the truth of the matter is that, guys, just be very careful when you deal with investments. Try and build your own ideas, right? So all this stuff I'm telling you is to arm you guys so you can go out there and build your own ideas. All right, so let's move a little bit forward. Climax. Okay, so this is the whole point. If I wanted to get involved in Ashanti right now, so if you notice, I've got some hours here. That's because I haven't yet bought this stock. Okay, I am actually contemplating doing it, and I'm looking to buy it. I'm of the belief that it can trade into $7 a share easy, and most likely we could be looking at a test or a spring at around about $4, right? But I'm not optimistic for that. What I am optimistic about is that there is a very good potential for this guy to rally out of these lows and trade up, right? And that's what I'm looking at. So on the interim, remember, markets are not linear, they're cyclical. So on the interim, it's possible that we're going to create more secondary tests, because we're now entering in what I believe we're now in a phase B. And if we're in a phase B, this is a monthly chart, so this could go on forever, right? So I'm assuming that during the phase B, we should find ourselves around about $20 a share, right? And this should coincide with a lot, right? And, you know, we should see impacts of this in other markets too, right? So that's some cross-market analysis that you guys will do with experience, right? So if I was going to buy this stock, right? So this is all about checking your position, right? So if I were to get long, right, and we will do this with a currency, we'll do this with anything. So if I was to get long, okay, let me use a different. Right, so let's say I was to get long at my preferred price of $7 a share, right? So just mid arrow here, right? Now, where would I look to manage my risk? Right now, I can see prior lows, and this is what a lot of people get wrong is I can see where we are in reference to prior accumulation zones. So I want to make sure that I'm clearing my investment to roughly about $1.61, and that's my risk, right? So if this thing were to push lower, then I would assume that if we're trading on the $1.61, then I really got to consider that I made a poor investment, okay? And I might have to get out of this asset. Because it's now in a new reaccumulation point. Or, truth be told, I could hold this stock. With the stock market, it's non-margin trading, okay? So you can hold it. You don't need to cash out, right? The truth of the matter is that you might just have to buy more at a slightly lower price and just accept that you paid a poor price earlier on. So that's the dilemma sometimes you have with stocks. And the company may well get acquired, so you might get offered a premium, but you might still lose on that investment, okay? So just things to bear in mind. But if I'm right on this stock, right, and I can get that achievement, then I'm looking to probably cash out in the future for about $20 a share. That's relatively a good investment if you think of it more from a risk to reward point of view, okay? So just so we have it. So this is a very simple way of dealing with risk and loss. It's actually, there's nothing complicated. When we deal with margin trading, so let's pretend this is like dollar yen, GB USD, euro GBP. Let's imagine this is the class of Forex, right? So my stop loss would probably go exactly at $1.61, which means that I will be exited out of that trade. If it hits $1.61, I don't really have a choice. It's margined here, and I'm probably going to lose my money, right? Now, however, if I'm right and it goes up, then of course I'll be cashing out at $20.60. So again, this would be your stop loss, and that's how you manage it. Now, as we start to build up, right, let's say as we get into, in a margin trade, as we get into $16 a share. Now, let's say I was holding 5,000 shares of this guy, and I decided to cash out 2,500 at $16 a share. That would be a really good trade, right? Because I'm selling 2,500 at that price, and I'll hold the rest. Now, if I was in Forex, I would, instead of cash out, that's an option depending on how many lots I'm holding, but I would cash out and I would say, well, I'm going to break even the trade. So basically roll my stop loss to just a little bit, let's say $8 a share, right? So that's my stop loss. So if we were to pull back from about 16 back to 8, then I want to exit that trade with a no loss situation, right? And that's how we manage it when we're dealing with margin position. But in this case, we're not dealing with margined positions. We are just dealing with buying the physical stock. So in this case, I want to keep my options open, and I would say, well, reasonably, it becomes a bad investment at $1.61, but in reality, I can still hold it. Or it goes up, in which case it becomes a great investment, right? But this is definitely our phase B. So position in it is really crucial when we deal with this going forward, and that's how we manage those positions. Now, on the flip side of the fence, you could potentially also look at, say, well, let's assume we get the spring, right? In which case, if we get the spring, I would look to buy, the moment I see the spring and some strength out of the spring, I look to buy about maybe $6.50 a share. That would be a great investment as well. So I maximize. So right now, I'm waiting for this stock to drop slightly lower in order for me to get involved. Now, what's the crucial bits here? We got the climax. So this is a typical low volume climax, okay? So even though the volume's a bit spiky down here, relative, the volume's quite low. It's relative to, and that's the other thing about volume. Look at it relative to what the volume's been trading in the stock, right? So for now on the monthly, it's a bit low, but there's definitely some climaxing going on there. And then we pushed the AR, actually, and if you look at the AR actually occurred over from about sort of 1st of July 2015, and that AR ended 1st of August 2016. So it was a straight run up from $6 a share to $22 a share on the AR. Okay, so this is crucial, and you find a lot of traders actually look at the market in this context of trading it within swings. All right, so now if we hit the lows, I'm expecting more STs. Right, we may even break the barrier of the trading range, right? And if I hold it for even longer, I can accumulate this position, very similar to the way the composite man does, right? So you can kind of create a bit of an idea, right? So I can then start exploring the concept, okay, that we might hit down and we might start seeing LPSs at this point, right? So I'll be accumulating slightly higher as we go, right? So I can start visualizing potential moves, right? And then maybe a test of that upper side of the creek. And then I can see more LPSs, right? And then eventually I'll start a big markup, which might take me even a $40 a share outside of the trading range. And this could be like in 2025, right? Or 2022. So this is not like something that's going to happen overnight. But if I want to accumulate this position, I can cash out my stocks at different points along the way, and then I can move in for the big buy for the last run of the decade or that kind of stuff, the next credit crisis on the horizon, and I will be riding that train all the way to about $40 a share, in which case I sell out and I start the new distribution and cause the biggest crash of all time. And just like you saw in Jesse Livermore being blamed for the 1929 crash. So but you're never going to be blamed for that, because we just don't have enough money to cause that kind of a problem. But there will be investors who people will be looking at the point where we make that decline. So you can start to build a roadmap with some of the investments that you're making and where you expect them to be based on how you're visualizing them on what cycle, and being always mindful that the markets are not linear. There will always be another cycle in operation. So the smaller your cycle, the more aware you have to be of other cycles in operation, right? And so that gives us an example of obviously how we manage more or less a live type position using a real-time stock. Okay, so that's just about a bit of safety check-in, right? And very lastly, don't forget your 5-wave check. Okay, I mentioned this earlier on. Really, really important, right? If I can identify 5 waves anywhere, right, then there's a good chance that I am witnessing something quite interesting, right? So that 5-wave could run into a climax. That 5-wave can run into a spring, right? But as long as I can see that, the climax tends to be at the end of a third, right? Sometimes with waves, and that's what people get wrong, is that we might end up with this scenario, okay? So this could be it, right? So this here could be, this could be the spring we're running into, right? This is the climax, and if that's the case, that's the end of our third. So there are a lot of things that we can use, but I want to be able to establish a 5-wave count just to give me like a bit of a safety check, okay? Just keep me aware of where I am relative to certain asset behavior. Right, so hopefully that helps, guys. Any questions, let me know, and see you on the final module of this program, and hopefully you've enjoyed it so far.